Hey, it's Michael Tiny Saul with the market recap for the week ending Friday, January 18th, and the look ahead for the week starting Tuesday, January 22nd, 2013. The 21st is a holiday in the U.S. It's Martin Luther King Day, so the markets are closed. So officially the week will start on Tuesday. A couple of things before we begin. These videos that I've been doing every week for the past a couple of years at this point now are going to be cut down in time here. Rather than doing them for 20 minutes at a clip, they're going to be less than that. We've rolled out our newsletter, the Winning Edge Trader newsletter, and right now it's being beta tested. Feel free to try it out. There's no credit card required or no other payment form required in order to access it. We'll put the link in the video description. We'll also have it probably pop up on the screen here in my editing. You can go check it out. All the newsletters are archived there. Like I said, there's nothing for you to do but go to the page and click on the link. The chat room has already been out since September. That's also in beta test mode. You can go and come in and feel free to join us in the chat room. At first, it was mostly based around index futures, but we're now doing stocks along with index futures. So if you are a stock trader, there is value there for you as well. Also talk about options and, of course, the index futures. And we're also going to be rolling out a twice-a-day email service that's going to be going along with the newsletter in order to manage it during the day rather than having to wait to the end of day in order to get updates, if there are any updates. But just people have requested, hey, can we get a little update on this stuff and maybe a little look at the market? So we're going to be integrating that as well. Now, like I said, right now you can beta test it, and there's nothing required except for you to go in and download the newsletter. For the chat room, you'll have to sign up, but once again, there's no credit card required. And if you want the twice daily email, you just have to join the mailing list, which is also, you just have to put your email in, confirm that you're a real human being, and you're going to start getting them as well. So the videos are going to be just a general overview of the market here. The newsletter goes into market timing. It goes into individual stocks. It goes into it has our weekly battle plan. It has my trading tip of the week. It has a sector spotlight. It has another column that's coming out that my partner is going to be writing as well. So there's a lot of value in there. And if you're serious about your trading, no matter if you're a day trader or a swing trader or an investor, it is definitely going to be worth your while to look at it and see if it fits in with your general game plan of how you set up your trading each and every week and each and every day. All right, so let's take a look at the market here. The SPY broke the 2012 highs on Thursday and then rejected. A lot of people were saying, okay, that's it, it's the double top, but the next day, even though it wasn't a big day, it was option expiration, we wound up closing above those 2012 highs. So that's a good sign. Right here, this is what we call a KDA, a key decision area. It is an inflection point. It's where something is likely to happen. That there's a couple of things that can happen here. First, we can go sideways here and build a little balance before our next move. Second, we can reject this. Now, that rejection can be hard, like a lot of people are calling the top here, and that's it, this big double top, or it can be mild. But if it's mild, I more or less consider it going sideways. And the third thing, which I think has a better chance of happening than just the crash, is that we can go into an acceleration type of mode here and get a blow-off move. Trends end in a climax. Right now, we have not seen a climactic move here, which in my opinion means there is still one to come. So could we pull back here? Sure. And again, unless we really just get hammered and take out the 200-day moving average on a really big push that actually sticks there for more than a couple of sessions, okay, the uptrend would remain intact. I've been talking about this now for weeks, how you have to look at the bigger picture. While everybody was calling the break of the 200-day, everybody was saying, oh no, that's it, that's it, that's it. I said, you have to look at the weekly chart. You have to look at the bigger picture. And just basic trend analysis. Okay, higher highs and higher lows. And now we've hit yet another higher high. It's not by that much yet, but we'll see where it leads. All right, am I a perma bull? Well, not quite. I wish I could be highly confident in the bullish stance. I'm not. That's why I'm giving three different scenarios here. And there is a chance that we could get a whack and decide to pull in here. But in my opinion, the probabilities are sideways consolidation before another move higher. That means either absolutely sideways, which is rare, or a pullback that's not dramatic, just a mild pullback. Maybe we even fill the gap here from the beginning of the year. Okay, that's what I think is most likely to happen. Second is we start to accelerate through this and maybe move into blow-off mode. And the third, in my opinion, the least likely, is that we just tank here. But I'm still considering that a possibility. Okay, I'm not ruling it out. I'm not saying there's no way that can happen. I mean, that's absolutely ridiculous. Of course it could happen. And there are actually a couple of sound arguments for why this move could fail. All right, so we'll get to that in a couple of seconds. But this is the place where something happens. We usually don't just sit at an inflection point and just go la 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 la, let's just stay here for a while. Okay, so if we're going to pull back or we're going to move sideways, I'm going to be looking at that for the next move. All right, sorry about that, I got a phone call. So that's the deal with the SPY. Now the Dow has not yet reached the 2012 highs. I'm expecting that to happen sooner rather than later. And then you have the highs up here from 2007 at 140.169 would be the next level. I didn't show the next level on the SPY. Sorry, I got distracted. That would be 157.52, which is about 6% or so. I don't know. I didn't do the exact math, but I just did it quickly in my head here, which is not that big of a move here, especially if it starts accelerating and goes to a blow-off type move. All right, now the Russell is leading here. The Russell is at all-time highs, continuing to rock and roll here, and that's good. I want to see either the NASDAQ or the Russell in charge, preferably the NASDAQ, which we'll get to in a minute. But the S&P, I'm sorry, the Russell being in charge is also a good sign. Now 94.60s, next resistance. That's a pretty nice size move from here. Again, I don't know, what's that, 7%? Maybe a little bit more, whatever. I'm just doing it off of my off the top of my head here. But it's not that far of a move, especially if it's going to go into a type of move like a blow off type move. Okay, if I could say it. Now, the one problem that I have in the indexes is the Qs. NASDAQ continues to lag, and I wrote about this in the newsletter and this week's battle plan, and really something to take note of. I know a lot of people are just saying, oh, it's all Apple, it's all Apple, it's all Apple. Well, yeah, Apple has the highest weighting in the Qs, and if Apple would get off its butt and start to rally, the NASDAQ would likely get in gear, but it's not the only reason that the NASDAQ is lagging. Okay, and if you notice where the NASDAQ is, I mean, it's off its these lows up here. It's not like Apple, which is at multi-month lows there, and it is in a balance area. And yeah, Apple holding fast or getting a nice bounce. Okay, sorry about that. Watching the kids on the all the kids on the holiday. Anyway, so this balance area here, if Apple does get a bounce, this can get a nice push up here. Still has some issues up at 68.60, which is the 78.6% retracement. But if it got through there, then we'd be looking at these highs next for the Qs. Okay, so that's one of the problems I have with that, and the reason I'm not just all out bullish, even though I think we're likely to either go sideways or move to a blow-off type move. Another reason is, if you look at the VIX, it is at multi-year lows here. And the complacency is pretty thick. Now, a lot of people will just look at this number and go, oh my goodness, it's an automatic sell. You got to sell the market here. I do not agree with that, okay? As we see here, for years at a time, the VIX has stayed in complacent levels. Yeah, a little spike here and here, okay? This is the deal. Fear is more mean reverting because that's high volatility. Okay, low volatility, even though Sheldon Annenberg said volatility is mean reverting, means period of low volatility followed by periods of high and vice versa. Low volatility can last much longer than high volatility usually does. Okay? Now, you can never underestimate complacency. You can never underestimate how much complacency there is in the market, how much confidence there is in the market. All right, it can continue for a lot longer than you're thinking or expecting it to. So don't get caught up in this, oh, we have to fall. Look how low the VIX is. First of all, we know there's no have to in the market. That's number one. But number two, it can stay complacent for quite a bit of time. Okay, here's another batch to back here. And you can see here, look, it stays fearful and stays high volatility for a while, but nowhere near as long as we've seen it stay complacent for much, greater periods. Even when the VIX is elevated, look how it doesn't go that far with these occasional spikes thrown in there. All right, so that's really it for the video. I am looking, like I said, for something to happen here at this key decision area. Three things I think more than likely we're going to try to digest here. I also think there's a chance we accelerate and go into a blow-off type move. And then the third, which I think has the least chance of happening, but definitely not ruling it out, is a sharp topping type pullback. In other words, we're here, that's it, we couldn't go, and then we just lose it. But I really don't get concerned with that until we're below the 50-day first, and then, of course, the 200-day. As long as we're above these moving averages like that, I'm leaning bullish, even if we pull back, which is fine. A nice, orderly pullback. And, of course, here's the thing. Right? Look at the way that we've been trading here. You see that these pullbacks here, they could be pretty, oh, look how sharp this pullback is, or look at this move or this move. Okay, they can knock the bulls out. They can sap the confidence very quickly. But again, until they break major levels, I'm not really going to get that concerned. Of course, I'm going to be watching Apple, but I'm also going to be looking at other parts that make up the NASDAQ, of course, to see if they'll support a move. And if the NASDAQ does get going, I think that the SPY will move higher pretty quick. All right, so again, check out the newsletter. It's 100% free for now. Check out the chat room as well. Links are in this description. I will talk to you in next week's video or daily via the email. Take care. Have a great trading week.